What's up, everyone? It's Scotty with MoneyVest. So in this video, we are going to be talking about Enphase stock, ticker symbol ENPH. And quite honestly, as long as I am on this stock and as bullish as I am, as confident as I am, this earnings report was actually not that great. I'm going to be very honest. I have to be brutally honest here because we already knew kind of going into the earnings expectations that it was not going to be great, but this was actually quite terrible in my opinion, even though they actually ended up, providing us with some good, decent numbers. Margins actually expanded. We did see a lot of deliveries. They missed on EPS. They missed on revenue. The guidance was not that great, and the stock's up 14%. So I'm doing this video before the market's opening. I actually wouldn't be surprised if the stock sells off intraday. There's some profit taking. That's exactly why my plan right now is it's going to be to sell calls right at market open to see if there's any good premiums that I can get. So I can take advantage of maybe that intraday sell-off that I'm expecting in Enphase, considering that the report was, in my opinion at least, being completely honest, being completely objective, not that great. Now, that doesn't mean that long-term thesis changed. That doesn't mean that long-term the company is not going to be able to perform well. It just means that we already knew that going into this fourth quarter, numbers were not going to be that great. They weren't great. They were, in fact, a little bit worse than what I expected. The guidance was also not that amazing, and the stock's up. So I think, in my opinion, there's opportunity here to take advantage of by selling calls and by hedging that intraday volatility if there's any type of pullback. I could be wrong, but either way, I'm happy to generate some premiums along the way. So hope you all enjoyed this video. By the way, make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below. Again, feel free to add yourself on our Patreon. So, the first week of the month is obviously the best time to join. You get access to all our spreadsheets, all of our members-only private videos, over 45 plus videos, including all the Discord channels, trade alerts, trade ideas, buy and sell alerts, options alerts. Everything's going to be included. And do connect with me on Instagram as well. My handle is going to be CastWRP. I do post a lot of interesting stories behind the scenes, my travels, portfolio updates, tips, strategies, polls. Everything's done over there as well. So connect with me on Instagram. Now, EPS came in at 54 cents per share versus 55 cents that was expected, and revenue came in significantly lower, almost 8% lower than what the consensus and analyst expectations were. So $302 million versus $328 million expected. The stock price is obviously up, popping over 13% after hours and pre-market right now as I'm recording this video. $113, $114, a big candle coming in. And this right here were some of the numbers. Now, before we come back to the presentation, we already know 1.2 gigawatts of energy storage systems shipped, 2023 revenues of $2.3 billion. They kind of rounded up a little bit. It was basically flat. 2023 cash flow from operations is $696 million, so sub 700, and 2023 GAAP net income $438 million, non-GAAP $613 million, and 1,700 installers in the Enphase installer network EIN as of December 31st, 2023, as well. And approximately 73 million microinverters shipped, representing approximately 24.2 gigawatt hours of energy as well. Now, this right here, our core differentiation, semiconductor integration and predictive control. One of the key biggest benefits I could see for Enphase is the software-defined architecture, like literally the fingertips of your phone. You can literally manage everything on your phone and through an app. So I think that's a huge benefit. And look, the thesis, like I said, doesn't change. I still believe that Enphase is going to be a pretty big dominant player in the solar microinverter, solar renewable energy space. Long term, as we see this transition towards renewable energy, they're still going to continue to perform really well in those fundamentals. Of course, we do still need to keep in mind the Inflation Reduction Act. We do still need to, kind of understand the transition through a lot of government subsidies. Governments all over the world are kind of encouraging and forcing people, incentivizing people to go towards renewable energy. So Enphase is going to benefit from that green transition. However, interest rates and financing and competitors and market pricing and pricing pressures and all that is going to weigh some little bit on Enphase long-term as well. So obviously, it's not going to be all sunshine and rainbows. We're already starting to see a little bit of those pullbacks. Last 3 quarters, revenue has declined consecutively for Enphase, which is, of course, quite concerning for investors, which is exactly why the stock's been selling off. Now, IQ8 microinverter, residential markets, they've been shipping to US, Canada, Mexico, France, the Netherlands, Germany, Spain, most of Europe, India as well, coming soon to the rest of Europe as well, and up to 384 watts of AC power handling and 14A panel current as well. This right here is increasing our total addressable market. So a share of the wallet per home. Now they're seeing Enphase potential per home of $12,000 US dollars versus 2021, which was $9,000, and 2019 was only $2,000. So they're definitely expanding their potential market opportunity here, which is also good. But this right here are the numbers. Now, margins are growing, which is actually good. I like to see the margins expanding. That means the company still has pricing power against a lot of other competitors. Enphase actually does have a lot of pricing power for its microinverters because of the higher tech and higher architecture it provides. But because of that higher pricing, customers are willing to pay. But at the same time, financing cost has also increased because of higher interest rates. And if you take a look at what's happened with the revenues, I mean, it's gone from 711 to 551 to now $300 million. So what we have seen in the last 3 quarters basically is a decline in overall revenue, but quarterly operating expenses by the year has also substantially increased. If you take a look at 2023, 28%, and operating income as a result has also gone down for the last 3 quarters. So that's, again, revenue, operating income going down, margins still surprisingly good because of the pricing power, and operating expenses also up 28.6%. Now, these right here were the numbers. We're going to actually analyze them on a whole. So if you take a look at 2023 as a whole, $2.2 billion of revenue, just a little bit lower than last year, $2.33 billion. Gross margins expanding by 5 percentage points. That's actually pretty good. And operating income also up slightly from $690 to $697 million. And net income was also slightly down from 647 to 613 million, but on a GAAP basis, it was up from just under 400 to $438 million, and diluted earnings per share at 441 on a non-GAAP basis. So if you simply take into account that number, so let's just do 114 divided by 441, we're looking at a 25.8 times non-GAAP earnings multiple for Enphase, which is actually, I would say it's reasonable. Could still be argued a little bit rich considering the growth rate is not that strong, at least not right now. And for the first quarter, this is why I believe the stock actually does have potential to sell off intraday, is because they see revenue between $260 to $300 million, includes 70 to 90 megawatt hours of IQ battery shipments with gross margins to be 42 to 45%, non-GAAP gross margins between 44 and 47%. If you come back to the revenues that they did in the first quarter of last year, of 2023, we looked at revenues of $726 million. That's going to be a pretty bad comp for Enphase. I mean, we're looking at a 50+% drop in revenue year over year. Margins coming down from 45.7%. I mean, they're guiding for 42 to 44 to 47. So a slight decrease in margins on it's going to be basically mid guidance here. 45.7 is kind of like in that mid guidance. So margins are maintained, but revenue is going to see a big decline. So, I think 2024, it's really towards the back half of this year that Enphase can actually make up for all the lost revenue for the first couple of quarters, especially when interest rates actually start coming down. So that is something to keep in mind because the guidance was actually not that great. And again, this is the overall numbers here we already went over. Balance sheet continues to be pretty strong. So we're still looking at $1.7 billion of cash and marketable securities. Total liabilities at $2.4 billion, with, of course, their long-term debt sitting at around, we've got pretty low, short long-term debt here of about $1.3 billion. So we really don't have a lot of debt. So balance sheet's pretty strong, but revenue expectations are not that great for Enphase moving forward. So that's exactly why, I don't know, I could be wrong. I want to be wrong, but I feel like there's a possibility that Enphase sells off intraday and we see some intraday weakness and some profit taking because investors overall have also been down on this stock for quite some time, and they may want to use this spike, use this after hours market opportunity that it's up 14% to kind of salvage whatever position they can, get rid of it, or get out of the stock if they don't believe on the long-term projections. However, in the long term, I still believe that it has potential. We just have to continue to monitor the earnings and continue to look at how the company is doing in terms of the revenues and guidance and margins and earnings and cash flows and everything. All of that is going to be super important. So 25, 26 times earnings, not bad, not undervalued by any means, but not super expensive either. But of course, 2024, I believe towards the back half of this year is when Enphase can actually start making some moves, considering that the comps are going to be easier. So if you come back, if you take a look, they're going to be comping over, $302 million. So it's possible that third and fourth quarter, they actually do report some pretty decent growth in revenues, 30 to 40%. And kind of accelerate back up in 2024. But the first couple quarters, comping over 700 million, it's going to be a 40 to 50% decline, folks. That's pretty much a given. I'm not looking forward to the first, second quarter earnings here. I think the first half of this year could still be a bit problematic for Enphase, but it's the back half of this year that I'm really hoping and betting. Again, hope is not a strategy, but expecting for rates to come down, for demand to come back in, for revenues to progress higher and comps to be a lot better. So support wise, $90 to $93. Resistance, we are pretty much at resistance, which is exactly why I wouldn't shy away from selling some calls here on the day to take advantage of that. And resistance all the way up to 131, 132 also to watch for Enphase. So hope y'all enjoyed this video. Let me know your thoughts down in the comment section below. What do you think? Make sure to follow me on Instagram. CastWRP is going to be my username. Join our Patreon, join our Discord. We'd love to have you on board over there as well. And make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.